Good morning. Another mass shooting in the U.S., elections in Israel, strife between the continents. Another day, another breakdown. Index futures are burgundy this morning ahead of this afternoon's 1 and 2 year bond auctions. Markets closed up yesterday in the U.S., the Nasdaq adding 1.23% on tech shares rising on a slight drop in 3 and 6 month bond yields. Also providing some backwind, President Biden said he was considering an additional $3 trillion infrastructure spending spree to boost the economy. As you can see, that means big corporations and banks, since the small caps Russell remains unimpressed by the promise. On the data front, home sales were down by 6.5%, and Federal Reserve Chairman Jerome Powell indicated concern to Congress about the 6.2% unemployment figure. Markets in Europe closed mixed yesterday. The FTSE and DAX up 0.25%, the CAC and Euro down half, and the 10th after France's bond auction saw a 20-tick yield increase. This morning, of course, we have a reversal of that as the major trend in the wind is red, following Asia, of course. Yesterday, ECB President Christine Lagarde revealed that the bank had pushed up bond purchases by 21 billion euros, tripling the weekly pace. Currencies this morning are also down as the Eurozone's current account suffered a 6 billion euro contraction in January. While in Britain unemployment is down 0.1% to 5%, earnings also improved but missed expectations at 4.2% in January. In other cheery Brit news, Ireland's foreign minister yesterday said that the EU was preparing to show flexibility over the Northern Ireland Brexit protocol if the UK forwarded a workable proposal. On the euro-dollar map, we're looking at a huge bearish engulf and the beginning of more red at the end. The RSI is still negative. Those bearish buyers seem to be entering the markets with increased fervor as London wakes up. 118.94 should probably be our next support test. Asian shares were down this morning, the Hang Seng out front with a 1.5% contraction as Chinese equities were depressed by a fresh round of sanctions. Both the US and EU yesterday coordinated their efforts, targeting Chinese officials over human rights abuses against the Muslim population in the Xinjiang province. China said it will launch countermeasures against EU officials, including parliamentarians and human rights. Its charge d'affaires to London said that charges were all lies. Meanwhile, the yen is up a tad after Japan's core CPI improved to 0.2% year on year. Oil continues to meander in the $61 region for the third day in a row, as does gold in the 1730-40 region. Bitcoin lost well over 7% yesterday to a 2-week low. Fed head Powell had said that he wasn't rushing into central bank digital currencies anytime soon, and when he did, it would be to put in a service that exists alongside the fiat dollar. We can see here that vast drop from yesterday with Bitcoin followed by a bullish engulf at the end. The RSI is positive. We may have briefly dropped through S1, but there's a good chance of us rising at least as far as our moving average, if not beyond. Bloomberg this morning reports that Microsoft is finally entering the social sphere. It's preparing to buy the Discord messaging platform for about $10 billion and perhaps install it alongside its Xbox gaming platform. Microsoft's last big acquisition was LinkedIn in 2016 for $26 billion. Major oil company shares are down ahead of their meeting today with the U.S.'s Joe Biden. On the agenda, we're guessing pipelines and other environmental issues that are becoming a sticking point, which may need some lubricating. And after its spectacularly failed IPO last week, WeWork has announced losses of $3.2 billion in 2020, according to the Financial Times. Well, that's Tuesday. A lot of geopolitics in the air. It's almost as if the data no longer matters. We'll see you again tomorrow.